Hello traders, this is Rich from Tradesight. This is the market preview for Tuesday, March 25th, 2014. We had a sloppy day today. Probably the weakness was most acute in the Nasdaq sector. Nasdaq Futures were down 28 on the day. The Dow was essentially flat, so it was really about the high beta stuff. The biotechs were extremely weak today, and even though the Dow was kind of hanging on and it really didn't pose too much of a loss, we did have some pretty weak market internals. Advanced declines, even though the Dow was about flat, advanced declines on the New York side were minus about 800 issues, or minus 1,550 on the Nasdaq side, which was a pretty good drubbing. The rest of the intermarkets were kind of mixed up a little bit. Oil was higher, gold was lower. And certainly, definitely, we're seeing a reshuffling of the deck right here. Well, let's move on and take a look at the price patterns first and see what they have to tell us. All right, first, let's take a look at the broad market via the YM futures. You can see we dropped down into the midpoint of the active trend channel, found support there, pivoted back up, essentially retested the high. Right now, we're still kind of forming this this bit of consolidation here. You know, this almost could be a reverse head and shoulders, if you will. Here's your neckline, straight across here. Here's your left shoulder, the head, and the right shoulder. That could be interesting. Have to really circle the wagons here, get going pretty soon, though. If we get a little bit longer in the tooth here, we're going to be too far along in the right shoulder, and that's going to basically nullify this pattern. And just because this pattern is present doesn't necessarily make the overall market bias positive by any stretch, but it's definitely going to be a powerful measured move if that does release. All right, so here's a look at the Nasdaq futures. Nasdaq futures definitely don't look as positive right now as the Dow potentially could. Right now we're coming down to the lower part of the current active trend channel. That would be real negative if we breach that for sure. That's definitely something that we need to be on top of. We got back up into the upper boundary here and obviously didn't have the power to get through it. We didn't quite interact with it today on the low basis, but the intraday low was just a little bit above that lower trend channel. If we get down there and settle below it and follow through, that's going to be a key technical development to the downside. Here's a look at the Dow Jones Futures, which right now we're still just kind of pivoting around this 8-ace area at 16,250. Haven't really been able to do anything definitive either way, but the one thing for sure is that we don't have any closes and follow-throughs above it. Every little excursion above that for the last week of trading has been rejected by sellers. So that's definitely a key area, 16,250. We need to get a settlement and a follow-through back above that to turn this chart back to positive on a short-term basis. The 50 DMA now does have a downward sloping line or bias, which is definitely negative, and the MACD is negative, but doesn't have a lot of doesn't have a real deep angle of descent to the downside. Keep in mind that if we do take out the 50 DMA and roll to the downside here, we're going to wind up with a MACD 0 line cross to the downside, which could unleash a lot of momentum to the downside. The other key feature here is that the 200 DMA now is sloping back to the upside, so we're not going to have that support and that draw from it at that same level that we did before. It's going to come in a little bit higher. And right now it's roughly coincident with the active static trend line. On the ES side of the market, still grappling below this 1875 area, which is 8-ace on the GAN box. We're short-term lateral right now because we're just chopping above and below the 10 EMA. So no real direction here from the last few sessions here, but we do have two nasty candles to the downside. Keep in mind, though, that if we do have a down day on Tuesday, that'll be 3 days down, and then that'll just make the shorts a little bit tough on Wednesday because the short-term guys tend to take profits after 3 days down. This is a little something to keep in mind looking forward here. I want to take a look here at the market internals. Here are the cumulative advanced declines. We are still fairly healthy here on the New York side, potentially setting up a lower low, but that hasn't happened yet. We're still positive here and have a fairly positive bias, but without any follow through right now. The Nasdaq side, however, does have a lower high in place here, and it is now qualified by this follow through to the downside today with this minus 1,500 issues. Here's a look at the same chart, cumulative advanced decline lines. This is up in the weekly time frame, though, and this is the one that's really important because this is the one you don't want to argue with. New York side, still somewhat positive, not a lot of follow through, but definitely upward sloping still. The Nasdaq side down here is the problem. We've got this lower high in place now, and we're actually undercutting the previous low, which qualifies this lower high. This is a real important development and extremely negative for the market overall. The Nasdaq side tends to lead the broad market. Once you see this same type of price action develop and can be seen on the New York side of the market, that's generally when the market really starts to take a turn, and it'll usually do it with a lot of ferocity. So this is a pretty big development. This is definitely unwelcome to the bulls, and should get the bears ready to start opening up their barbecue sauce for the bull barbecue. So we're getting close to it. The Nasdaq side is already there. The New York side really just needs to follow through and point the same direction. Once it does, then we're going to see some downward momentum and probably some good sustainable short trades that we can really dig into. Here's a look at the relative performance chart, or the ratio chart, if you will, of the NDX divided by the S&P. When this chart has a downward bias, that means the S&P is actually outperforming the NDX, or the NDX is underperforming the broad market. The NDX did break out and push above this key resistance line and show good relative strength, but for the recent price action, we've been rolling to the downside here, back into that area. This should be an area of support. If this support does give way, this is going to be a problem for the market. Don't want to see the support taken out. Obviously, this upward little trend line here, if you just paint it on with your eyes, has been taken out. That's not so important on a relative ratio chart, but you really have to pay attention to the relative levels of support. So here we are right now into key support. We need to see this hold here. If this gives way and we still see the Nasdaq side underperforming, the broad market's going to eventually have some problems. Here's a look at the relative performance chart of our major sectors. This is the XAU, the BTK, the stocks, and the banks. The XAU got hammered today because gold was very, very weak, so that didn't hold up very well. But the other thing that should grab your attention here is the poor performance in the BTK. The BTK got slaughtered today, really starting to develop a pretty acute short-term downward bias. Starting to get a little bit oversold here short-term, but definitely losing its leadership in the overall Nasdaq, which is definitely affecting the NDX overall. I think that's one of the things that's leading to this relative weakness that we've been seeing. Here's a look at the individual sectors ranked from best to worst on their performance today. The airlines were the top gun. Consumer staples were also positive. Utilities were up near the top, and the telecoms were up there. And those were all, except for the airlines, fairly defensive sectors, which really kind of goes with what we've seen today. One small positive is the transportation average was pretty decent today, and was definitely one of the things that was holding up the Dow. The oil services were fairly weak today, down more than 1%, which is a shame for the bulls, because it's not really supporting the weight that the transports were lifting today overall. The XAU was the last laggard today. That just got hammered. Royal Gold, silver, wheaten, a lot of the precious metals stocks just got really beat up today. And here's the BTK. The BTK was pretty darn weak today, and that's definitely something that we're going to take a look at in just a moment. All right, first up, let's start with the worst. Get that out of the way. Here's the XAU, last laggard on the day. Broke down below this key little handle area and followed through to the downside. It's going to find some support here at the 200 period moving average. I'd be surprised to see follow through tomorrow. Also, we're coming into the zero line on the MACD. There's a couple things here that are indicating that we're going to find a little bit of support tomorrow. The markets tend to like to game the 200 DMA before they move through. It's a big area. A lot of people follow it. Could be a self-fulfilling prophecy, call it what you will, but it's certainly something that we pay attention to here at Tradesight. So I'd expect to have a little bit of a measuring day today, if not an outright bounce tomorrow in the XAU. Next up is the BTK. The BTK was really weak, settled below the 50 DMA, lost this area of consolidation, broke that to the downside. We got up here to +2 ace, which was overbought, and now we're starting to work that off here. MACD's got a really really nice slope to the downside. We could see some more action to the downside, right, just hovering above the zero line. Wouldn't be surprised to see a little bit of gaining tomorrow in this 50 DMA area. And if we do release lower, then we're going to be looking at 2,500 next, which is the 4-ace level, and the big level is going to be the static trend line here, coming in about 24.48, 24.49 area. If we do bounce to the upside, we're going to find resistance here at the 7-ace level, because that was a demarcation of this little channel up here where we were consolidating sideways. Oil services are notable because we're 12 days up. It couldn't quite get the 13 printed today. A little bit of a low close here, didn't quite qualify. If we'd even closed in the midpoint of this real body right here, this would have been 13 bars up, and then really had some problems. But just keep in mind that if they do come for this and have another strong day, we're gonna qualify for a 13 exhaustion warning, and that's going to be pretty notable development on the chart. Semiconductors just kind of hanging here above the 10 EMA. This is actually still short-term positive with the weakness in the BTK. The BTK is going to bounce in here at some point, but you want to see some leadership come from somewhere in the Nasdaq, and if you don't have it in the BTK, it better be in the SOX. So the SOX need to hold the 10 EMA here, stay positive, and make an assault on this 8-ace level here at 625 before we run into a problem with our seeker count, which we're 9 days up on right now. Transports today still hanging into this general trading area. They haven't lost that, which is positive. So we'll just kind of consolidating around this 8-ace area at 7,500. If we break out, we're going to take a run at this plus 2-ace area, and that's definitely something that you want to be a part of if we do start to see some better price action to the upside. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.